Hello and welcome to the paid weekly recap for the week ending August 7th, 2026. I'm Keith Harwood, CIO of YellowTunnel, and also pictured as Vlad Karpel, the CEO and founder of YellowTunnel, and the creator of the patent-pending artificial intelligence behind the paid system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. YellowTunnel and myself are not investment advisors and not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, if you are new to options, I urge you to read the characteristics and risks of standardized options available at the Options Clearing Corporation at the link highlighted here. If you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we'll get into the recap from this past week and a little look into the week ahead. First things first, the 10-year yield. 10-year yield had spiked last week. It started to fade as tensions with Iran seemed to be dissipating over the weekend and into the beginning of this week. We talked about peace. Well, ultimately, that didn't come to fruition, right? So over this past weekend, we've had commentary from Iran saying that we were never really going towards peace, that they were doing their own thing. We haven't been talking. Things are going to get worse. Maybe we're making no progress. Who knows what's really happening behind the scenes? Sounds like a lot of this is being just fought in the headlines. At the end of the day, we don't have a deal with Iran right now. We're working through Oman or something, it sounds like, and who knows where it's going to go. Ultimately, oil prices had fallen. They started to recover. The markets took the news that peace was imminent and ran with it. And it ran hard, right? We broke out on Tuesday. Monday was a bullish day. Tuesday was follow through. Wednesday, we peaked and pulled back as that peace deal that was expected by Wednesday didn't happen. Then on Friday, we had weak non-farm payrolls. Bad economic data meant good for the market. And the reason behind that is that weaker economic data means that the Fed may be reluctant to raise interest rates in the short term, and that creates a tailwind for the broad market. Weakens the dollar, everything is good. So bad is actually good for the market. Whereas good may have increased the likelihood of a rate hike. Bad for the market. Right now, we're in this kind of maybe confusing to many, but not necessarily to those that have seen this over and over, environment where bad economic data is not a bad thing. What is bad economic data could be coming this week. We've got inflation. If we see high inflation numbers, that could be viewed as bad because that increases the likelihood that a rate hike is coming. And if we've got weak economic data with inflation, now we got a potential for a problem known as stagflation, where the Fed is kind of handcuffed. We can't raise rates because the economic data, employment numbers are weak. But we need to raise rates because of high inflation. So what do? If we see a low inflation print, that could set this next move up drastically. We will see how things go. That's on Wednesday morning. For the time being, we wait. And we look for new information on Iran, and we look for new information on big earnings. We got Cisco this week, for example. So a lot of information still being digested broadly. Earnings have been good enough. We saw great earnings out of Microsoft and Amazon, for examples, and that's been enough. And we've seen some money flow into tech, but tech has not on its own broken out. Semiconductors haven't been able to recover back to the previous highs. Maybe they will, maybe they won't. If the market can get a bullish tint, maybe they start to get that leadership again. Right now, the risk assets aren't necessarily the drivers. It's other sectors out there. Semiconductors already went through their run. April and May were huge moves. Stocks like Micron going up 2-3x. Was some signs of money flow back into some of those names late in the week, like Palantir in particular, after great earnings really rocketed. On the AI side of things, there's still bullish stocks out there. There's not nothing but on the earnings side, there is enough bullishness out there that it's helping create a bull market or support that bull market. Small caps also made a new high. S&P 500 is better than small caps. Tech is a little bit weaker recently. Tech had all of its strength in April and May. Small caps just going slower and steadier. Wasn't quite as weak in the dip at the end of July. Wasn't quite as strong as we came out of it as the broad market. But overall, right now, we're just in a rotating market with a general bullish tint. S&P 500 bullishness drives this bus. And so we saw the VIX. It got below 15 on Friday. It should open up above Friday, 15 on Monday because of the dip as a result of what's going on in the Middle East. But overall, VIX is low, options are cheap, and we've got this potential for some great leverage if the market continues to move. If we've got a tailwind driving a directional bias for the broad market, that's going to help the individual names. Now, speaking of the individual names, let's recap this week's activity and paid. It was a busy week. We started the week by exiting Bank of America. Now, of course, Bank of America, we held it till Thursday on the open. That would have been an excellent exit, excuse me. But of course, we have to exit at some point. And after a week of holding, it was time to move on. Exited Monday morning. Stock was completely unchanged. The options decay. It's what happens with these options, right? They over time decay. The theta risk is there. As time passes, they lose value. On top of that, the implied volatility falling causes these options to potentially lose value. We need that movement. We weren't getting that movement. Took the exit, took the 32% loss. It's not ideal, but you know what? It could be worse. And when we got some great winners like we had last week, these things end up being part of the loss bucket. The winners being bigger is the important element. Speaking of winners and losers, we had AT&T. So as a reminder, we had entered AT&T, took the profits on half on this spike on July 28th. The rest of the position was exited on August 3rd after the dip, and it was pretty stable throughout the week after the exit. So the second half of the position was entered when the stock was down about 2.2% from our entry point and a 55% loss on the second half of the position. As a reminder, the first half of the position was a 97% gain. Net, the whole AT&T trade was a winner. The second half was a loser, though. Entered at 58, exited at 114, nearly 100% in one day. That was great. Unfortunately, there was no follow through there. We had Schlumberger. Oil names were getting hit. Actually, they started to get firm by the end of the week as things didn't necessarily progress with Iran. We did end up taking the exit, of course, on Tuesday with the bounce back. It was pretty unchanged from Tuesday. Again, Thursday would have been the optimal exit point from a reduction of loss standpoint. But this never looked like it really it had any momentum going as things with Iran seemed less severe, less concerning. Oil prices lower than they were from the entry point on July 28th as signs of de-escalation came shortly after that entry point. Stock was down about 1.5%. The options down 34%. Similar to Bank of America, we saw that passage of time. A little bit of the stock movement against, a little bit of volatility hit. All in all, moving on from the energy name, kind of a relief, moving towards those winners. So speaking of the winners, Freeport-McMoRan entered on Friday, the 31st of July, and then it spiked. Taking half the profits on that spike up on Tuesday morning, closing the rest of the position on on Friday. All right. So the first half on that August 4th spike, stock ended up closing that day up 7.5%. We had our exit early in the day. Is what it is, right? You get a spike early in the day. We have the working order up for a 50% profit because the stock opened up a little higher. Ended up with a 57% profit over those 4 days. It books the profit so that if something like AT&T happens and we get a pullback, we still get pretty close to a break even, maybe even a profit like AT&T. But the second half is where it really kicked in. Second half of the position exited on the close with an 11% gain in 7 days on the stock. That created a 182% gain in Freeport-McMoRan, one of the bigger winners we've seen recently. Huge returns, great trade, very happy to be done with it in order to book those profits. 57% on half, 182% on half. So an average return on the total trade of about 115%, almost 120%. I will take that every day. If every trade was generating those sort of returns, this would be spectacular. It's not expected to have those kind of returns every trade, but we take them when we get them. They help cushion for those smaller losses like we saw in Bank of America or Schlumberger. These trades help offset multiples of those. So love the trade. And that wasn't the only one. Raytheon was similar. So the entry in Raytheon occurred on July 31st as we started to see that bull flag. Broke out to new highs on Thursday. Closed very firm above the previous high from July 28th. Everything worked out well here as well. Because of the spike taking the exit on Wednesday, we actually got greater than 50% on the opening print on August 21st. So the price of the stock was up higher, even working for a 50% gain, get better prices, get better fills because the stock opens higher. 2% gain in 5 days, 78% gain in 5 days on the options. This is the leverage of options really kicking in. Great trade. The second half, 114%. So an aggregate on the total trade for two halves of about 90%, a little more, 95%. Another great trade, great setup between FCX and RTX. This really sets the tone for what I'm looking for when we get these big moves in the market. Really enjoy seeing those sort of moves and seeing them impacting the stocks that the AI signals are generating. All right, so 4.5% gain generated that 114% return overall. Nothing to complain about here. Now, on top of that, we had 5 new entries this week. So another busy week. Nothing on Monday. We had Baxter on Tuesday. Baxter Healthcare, usually a safe haven for healthcare stocks. Baxter had great earnings, pulled back, started to show some firmness here on Monday and Tuesday. Closing on highs on Tuesday of this part, but then pulling back as the market started firm. There was more focus on risk. So Baxter ended up from the entry point down slightly by the close on Friday. We'll see what the new week brings. If there is a push to healthcare as people get concerned about Iran, that may actually generate some nice returns here. But in the meanwhile, we've got a small loss there. Delta looked like it was going to be very firm. With oil prices weakening, progress with Iran, all pointed towards the upside. But then as oil prices started to recover, Delta actually started to pull back. So a little bit of concern there for me, but we'll see how things go again going into the beginning of the week. Ultimately, it's down small from the entry point. It is not terrible, but I was looking for some of that oil price to continue to fall to generate that bigger return potential in Delta, where we were trading 96 plus when oil prices hit their lows. So far, kind of again a small loss. Then we have Schwab. Schwab entry on Tuesday, booking half the profits on Thursday. So within 2 days, we get by the close, it was less than a 1% gain, but it was enough to get that 50% gain in 2 days on the options. So that push up right after the open to the highs booked the first half of the trade. Great setup. Friday, we started to see firmness again. We'll see if that gets some follow through this week if financials become a source of investment flow. Overall, looks good. Already got half in the bag. That's a great setup. Looking now to see if there's a little bit of follow through this week for a bigger return, much like what we saw in, hopefully what we saw in FCX and RTX repeats here. I'm not counting on it, but if we can get a 50, 60% gain on that second half, that's going to feel pretty good as well. And then on Friday, we had 2 new entries. So Allstate insurance oftentimes gets bought when the market starts to show some weakness. If we see some weakness off of the Middle East, this actually could benefit quite nicely. We saw a lot of that in July. So July was a very good month for Allstate as the market was weakening. It continued because insurance companies were generally doing fine anyway. Time will tell. I'm optimistic about Allstate. We got a whole week to see if this can pull forward after having a weak Friday, but finding support at that 10-day moving average. Ultimately, the bigger support is down at that 20-day moving average. I'd like to not see it get there, but at the end of the day, that is the ultimate low support level. Thursday looked a lot better than Friday, just to be fair, right? If we push above those previous highs, though, that'll book half, and it'll set this up for a really nice setup once again. And then finally, we have TJ Maxx testing a breakout. Thursday looked like it was getting close. Friday, it almost got there. Again, we'll see if that retail sector shows some more firmness. And what you'll note here is throughout all of these names, it's not a lot of tech. So that tech sector that's been lagging here recently, that's not what the AI is identifying because it's not those stuff that's leading this market. And it may shift. So we're going to continue to monitor those names this week. Look for some new entry potential on Monday, Tuesday. We'll see where this market gives us the opportunities because we don't want to be just buying willy-nilly. Well, the market's going up. Yes, it may be going up right now, but that can quickly change, particularly on Wednesday when we've got that inflation data. Reminder, because we've got a 1 week hold max, 3 of these names that we've got out of the 5, Baxter, Delta, and Schwab will be exited prior to inflation. Doesn't mean we won't have new trades, though. There will be new ones potentially to replace those and set up potential for that further upside. So keep an eye on your inbox. Got a lot of trading going on right now. It's been setting up some really good returns this past week. Hopefully, we continue to see that generate in the future. The choppy market makes it for a little bit less, a slower return cycle. But if that bull trend catches hold, we should be in for another very exciting week. And as always, please join us in the live trading room. Vlad and I like to talk through all the market conditions. So we'll talk through all the stuff I just talked through here, talk about what's going on with Iran. We'll evaluate that inflation data, where the market money is moving, where the AI sees opportunities, where these short-term signals are generating some real potential for profits. So make sure you join us. There's a lot of really good stuff out there. The record speaks for itself. And if you can't join us during the live trading room, please do email us. I'm Keith at YellowTunnel.com and Vlad is Vlad at YellowTunnel.com. Thanks again, everyone.